So cool. So demand and supply zone. So before I start explaining the chart, I just want to do a couple of disclaimers over here. So one of the disclaimer is that this is something that I learned from somebody else. His name is Carmine Rosato and Dylan Campbell. I don't know if I'm saying his surname correctly. I don't remember his surname actually. So it's Carmine Rosato and Dylan. They are there in the Instagram. They got a website called Investi Trade or something like that. Investi Trade. So yeah. So I learned from him, and he's pretty good at it. He does only this demand and supply zones, and then I started applying into my futures trading, and then I correlate from the futures trading into my when I trade along for the stocks as well. So for example, if I'm looking at futures on a particular demand zone, then I know that the correlated stocks as well would have the same demand because their underlying securities are the same. So that's the disclaimer one. Second disclaimer is basically, does it work all the time? No, it doesn't work all the time. If all the demand zones has to be respected, if all the supply zones has to be respected, then the stocks will always move between those two zones. It will never go above, it will never come down. So of course, as Jeremy says, it works, but not always. That's all.
Everything works in the stock market, just not all the time.
Not all the time. That's all. So what are the demand? So basically, the demand and supply concept is pretty simple. When you have more demand, the price goes up. When you have more sellers or the supply is higher than the demand, the price goes down. And there's always a period where you have the balance period and the imbalance period. The balance period is where we normally call it as a choppy day, right? I mean, we call this, it just chops around. It doesn't move around. It doesn't give you a proper direction. That's predominantly a balanced day where you have a set of buyers and a set of sellers who are agreeing on the price. So the price doesn't move rather radical. I mean, doesn't move very aggressively.
So that's like price acceptance, an inside day, range day kind of thing.
Exactly. So it's an inside day range where price shops around. So that's predominantly a balanced day. And when you have that imbalance, that's where the zones come into picture. So when the zone is getting created, when an aggressive price movement happens, it can be to the top side, it can be to the downside. So whenever an aggressive movement happens from a particular zone to the upside, that there creates a demand zone. And typically you basically can look at the chart and make a sense out of it, because that might be a support area or a resistance which has become a support. And the other way around, it might be a support zone which has turned into a resistance area now, where the price has aggressively moved down that particular area. So I mean, people who have been trading, it's pretty easy for them to understand that concept, but I just want to bring out that particular concept over here to just talk about the imbalance part of it. So we are looking for the imbalance.
So one question. So like right now, because we're kind of pulled back like 6%, now we really have resistance zones. Back right before Thanksgiving, we really didn't. It was all support, right?
Yeah.
So it was super imbalanced.
Super imbalanced, right?
Right. Okay.
So when you put that in a 4-hour, 1-hour chart, the concept is to understand where that imbalance has started, and that is the zone that is marked into the chart as well. So if you see my chart, I have a lot of 45 minutes, 1 hour, 4 hour, 3 hours, 90 minutes, 45 minutes, all those lines marked up. I'll explain you where that comes up. So that's where we talk about imbalance side of it. Buyers coming into the picture more than sellers, or sellers coming more than the buyers. Now, so how do I get the demand zone? So before talking about the zones, I want to talk about the basing candle. So basing candle is basically where price, what do you say? There is a consolidation which is happening. So on a daily or 4-hour chart, when the consolidation happens, that's your basing candle that's created. And I'll show you how the basing candle happens. So if I look at the 4-hour chart over here in this ES chart, and if you can see clearly over here, this is where the price has come down, has consolidated to a particular region in this particular zone for a long time. So this is a particular area where the price is consolidated, and from this juncture, the price has aggressively moved up. So this for me is a basing candle. This is a basing candle for me. Basically, the price consolidated, and this is where the price aggressively moved out. So I basically will mark this as my demand zone, where I'll mark it as a demand zone, and where I'll draw my demand zone is basically the open of a bear candle to the low of that bear candle.
So demand zones are the place where you have the imbalance of buying.
Exactly.
And then supply zones are the opposite.
The opposite, exactly. So I look for so how it was taught to me is that if it is a demand zone, I look for a bear candle, and if it's a supply zone, I look for a bullish candle. So if it's a demand zone, well, let me just write it down over here. Demand zone basing candle. That. Supply zone basing candle. This works. This is where I mark. And how do you mark the zone? So if it's a bearish candle, so you mark the open to the low, and if it's bullish, and I mark it from the open to the high.
Okay.
So let's keep that on the top of the chart.
So it's basically the last candle.
Exactly. Last candle.
The last opposite direction candle before the large move. Or vice versa.
Correct. Correct.
Yeah, okay.
So here we have a demand zone. So what I do, I mean, you can mark it as a zone, but if I start marking zones, and if I look at my daily chart, it's pretty. I mean, I'll have 10 tons of that zones piled up in my chart, which I don't like. So what I typically do is I just put a horizontal array in that place, and then mark it as a particular. So let's just backtrade this. Yes, very quickly. 2020. Sorry. Yes. December. Okay. And let's replay to this particular. Come on. All right. So here's my demand zone over here, which I marked it as a 4-hour demand zone. So this is my demand zone. Just for the clarity purpose, I'll just mark the zones over here for the time being. And if I basically would look for this particular, I'll have an alert as well on this particular line on the top of the zone when the price come into this picture. So let's just quickly move over. So you can see if I go down to a 30-minute chart or a 40-minute chart, you can see the price dips into the zone and then quickly bounces off. So if I have an order set on this particular zone, if I had ordered over here, and if I had a 20-point order, I would have easily got that 20 point with a $10 stop.
And so that's you. So you'll set that up on basically the top of the demand zone.
Yes.
As you're hoping it comes into this area and bounces and doesn't really, I mean, maybe leaks a little bit, but then it bounces.
Right. So that's the demand zone, how I draw a demand zone. And I'll talk about how I enter the trade, everything later. First, let's just talk through the zones, what are demand and what are supply zones, and then we'll go into the chart on detail. how to take the trade. So is that all right?
Yep.
Yeah. So now in the opposite, you can clearly see there is a rally, there is a bullish candle, and then there's a aggressive drop. So if I have to go mark my supply zone, this would be my supply zone. So I would draw a mark. I would put a zone like this, which is basically this. I'll mark it as a supply zone. So this becomes my supply zone, and I'll put a kind of candle over here, and then let's just quickly look how that happens. So here it is. I'm looking at a basing candle, which is a bullish basing candle, and I mark the zone from the open of that bullish candle to the high of that particular bullish candle. So that's how I mark this, and then extend it to the right. So I can see, I'll keep a note of when the price comes into the zone, and then if it rejects or not, and then take a trade based on the low of, I'll short the particular trade. I'll take a short position with this as my entry, and the top of that as my exit, or as my stop loss. And then you can ride it, or you can take a 20 point or 10 point or 15 point, whatever you target area, if you want to take it.
So so if this is, even if this isn't 10 points, because you had a 10-point stop down here, you're just you're gonna just use that area.
It depends. So if I take a trade over here, you can either exit at a 20 point, or you can look for any other demand zone. Doesn't have to be all the way down here. There might be a demand zone over here, which you want to exit before that short push.
No, I'm referring to the stop size. So like you had a 10-point stop when you set up the bullish trade. So on this bearish trade up here on the supply zone, you said you're just going to use your stop as this. That's really tight, right?
Yes, that's pretty tight.
So the risk to reward is super high on the shorts.
Yes. So it depends upon the size of the basing candle. So if it's if this is one, then this is a higher risk trade compared to this one, which is there is a $7 stop. So this, compared to that, it'll be, depends upon how big the candle is. So that is where that is where you want to make, the decision whether you want to enter the trade with a higher risk one or a lower risk one.
Okay, so it's semi-subjective to the person's plan and their risk.
Yes.
Okay.
Yes. Right. So that's how I identify the zone. So from a chart, so I look into these zones from a 1 hour, 2 hour, 3 hour, 4 hour, and 30 minutes, and 90 minutes or 45. So these are the ranges. Anything about 30 minutes to 4 hour is what I check. 30, 45, 90, 1 hour, 2 hour, 3 hour, 4 hour zone. Now, why do I do this? Is because a 4 hour zone can be a huge zone. So if you look at it, if there is a aggressive candle over here, if there is a huge aggressive candle over here, this would be my demand zone, because you got a huge drop, you had a huge drop, a basing which looks like a basing, which is a good looking hammer, and then there is an aggressive move up. So my entry, my demand zone, which I need to mark it as a demand zone here. If the demand zone is what is a 20 point stop, which is much better. I mean, you can put an entry over here if you are ready to take a 20 point stop loss, and you have 40 point up towards on the top side, then you have a better risk reward in this case, if this is the scenario. So you got to decide on how you make the entry based on the time frame you're marking the zone. So in this 4 hour time zone, what I'll do is that I'll basically go down to a 30-minute or 1 hour chart and see if there is a stacked zone within that 4 hour zone. So within a 4 hour zone, you can drill down into a smaller time frame and see if there is a better way to trade that particular zone, or rather than having a 20 point stop loss, which doesn't fit into your risk management. And then I can instead of taking the trade at the top of this, if there is any better entry in the middle of it, and then have a shorter stop loss, and then take a short.
Yeah, have a proper risk to reward for your profile.
Correct.
Okay.
So cool. That's the judgment that you need to make. based on that, based on what time frame it is. Here it is, I don't have to drill down because here it's a shorter this one. I know my risk is higher because there is only a 5 point or 7 point stop. So, and I'll choose whether to trade off this particular line or should I even drill into it 1 minute zone at a time.
Gotcha. Okay.
All right.
So that's why you really need to be looking at all those different time frames once you start from the large one. And then obviously the larger the time frame, the stronger the zone, right?
Yes. Larger the time frame, the stronger the zone if it is a stacked zone. If there are multiple zones within that particular stack zone. So another factor is that just because I started at a 4-hour time zone doesn't mean that everything has all the basing, all the zones has to be in 4 hours. Sometimes if you see here in my chart, if we look at my chart, where did that go? Yeah. Some zones are in 2 hours, some zones in 3 hours, some are in 4, some are in 30. So not every zone has to be in the 4 hour to start with. So you can identify the zone in any time frame, 30 or 1 minute, or 30 or 45 or 90 or 1 or 2 or 33 or 4 hour, or even daily. So you can even weekly, you can identify the zones in whatever time frame. All you're looking for is basically a consolidation happening over a period, an aggressive move out of that. So here is the imbalance that happened. So you're really sure that, okay, there are more orders sitting there or people who couldn't get it at that particular time when the price happened. So when the price comes back to that particular zone, there will be more buyers because the price has aggressively moved last time. And there's also orders sitting there, which have not been filled. So when the price comes back to that zone, there is a bounce that you can expect.
So that's your support. The price is already accepted there, and
yes,
that's where they want it to keep going higher from. They don't want it to go lower than that.
Correct.
They don't want to get stopped out of their trade. Yeah.
Yes.
Okay.
So going back to the basing candle, there is no proper way to define that, okay, this is the basing candle, this is what you need to look. There is no true definition to a basing candle. But as I said, when I look for a basing candle to identify the demand zone, I look for a bearish candle from which the price have aggressively moved out. And if it is a supply zone, I look for a bullish candle from which the price has aggressively moved down.
Yeah.
Just to give you an example, if I so this particular candle, I can see there is a drop happened, a basing happened, and the price have not aggressively moved out of this. So I wouldn't just go mark this particular zone as a demand zone because the price has just bounced hardly 5 points and then dropped. So this is not a demand zone for me. This would be a supply zone for me, but it doesn't look like a proper basing for me because it has a higher support area and then a higher wick over here. So I look for proper what do you say? Not a proper doji in that particular situation.
Yeah, so you're looking for like you want that basing candle to be like a tighter or smaller, like highway doji.
Correct.
You know, like shaved bottom or shaved top candle where it's just there's not a ton of price action, and then you have that large exaggerated, say, you know, for ES's movement, right? It's maybe a 3-4 point candle, and then you have like a 10-15 point candle next to it.
Correct. Exactly.
Kind of thing.
Yeah. So that's basing, that's demand and supply zones. Now, how do you enter the trade in these particular zones? As I said in the beginning, not every demand zone, not every supply zone has to be respected because it all totally depends upon the market conditions. So if there is a demand zone in yesterday's price action, there were many demand zones here in this particular, this is NQ, this is while trading this, there were a lot of demand zones over here, and the price just went through as if the demand zones were not there at all, right? So you got to understand the price action, the market conditions, what we have, And just because there is a demand zone doesn't mean it has to be respected, and you blindly go and take a trade just because the price is coming into the demand zone. So you got to do a little more due diligence on what is the kind of price action which is happening.
There is
And
no 100% foolproof strategy, right? So this is just a tool to help you find the zones where you can look for a trade, right? For it to
exactly.
kind of be reverting back to the mean, so to speak. Right?
Yes.
Yeah.
Yes, totally. So going back here, if it is a 4-hour zone, the 30-minute, let's see if this particular time period, I'm just
that looks like a sick trade right here.
there you go. So yeah, this is a supply zone which we basically said, I'm not even, the price just shoots up without even considering that. So as I just want to show you that, okay, not everything has to go and bounce over here. If I dig into a 5-minute time frame, you can still see there is a small rejection which has happened, but I don't see any on a 5-minute time frame. I don't see any particular trade that I have to enter this one. There is a huge wick. If there is a high wave candle which happened next to it with a industry, maybe I would have taken a break of that. You got an inverse hammer, not a great inverse hammer.
Sellers in that hand, the sellers in this candle got immediately taken out by
exactly
bullish volume. So for me, that's going bearish. I'm not going to set up a short there.
Yeah. So I when you enter a particular trade in a particular zone, look for more confirmations, kind of, whether do you have an inverse hammer with a what do you say,
maybe you get
bearish engulfing, bearish
inside high wave candle or something right there.
High wave candle. Look for those setups and then enter the trade. What I also do is I see if the price coming into how steep or how aggressive the price is coming into that zone. If the price is coming pretty aggressive with a good amount of volume, and then if into a supply zone, if in this case you can see before even the markets open, there is a pretty much high volume in this candle. I can see this is pretty aggressive, and then this is basically take profit, all those kind of thing, and then price started moving aggressively into the zone. So here, one, the price is moving aggressively into the supply zone. Two, I don't have any confirmation that the price is getting rejected. So I wouldn't set a trade in this particular zone. I would basically see if I get the price goes, I'll look for a trade where it rejects, comes down, and do a double top or something like that. Then I would have more confident that, okay, the price is not able to make a higher high. It's rejecting second time. Maybe then
this bear volume staying pretty. That bear volume is staying pretty high, right?
Yes.
Well,
yes.
So like if it tapered off in that candle,
yeah,
right here, you might not have the strong candle next to it.
Correct. So look for those zones are where I'm ready to take a trade to based on whether it's a demand or supply. And second point is where I look for volume and price action into that zone, coming into the zone, to make a better decision whether I should take a trade or not. So I don't take blindly anything. So just because price is in supply zone, I don't take that. You got to see how that price action is happening in that zone as well.
Yeah, you got to have a reversal signal.
Yes, you got to get that reversal signal. You got to have a bit more confirmation as well into that zone. The second point, which also is important, is what I look for is, so let's go to another time frame, and this is one. This is one. So the another point which I want to make is that I also see in a particular zone. So if in this particular zone, so as I said earlier, a zone has caused an imbalance because price moved aggressively out of that zone, which means that there are sitting orders in that particular supply area. So if in this 4650, there is much more supply sitting orders happening there. And
much more demand right here, you mean?
yes, much more demand in this particular zone. And given that this looks a pretty solid support, the amount of buyers who comes to buy in this zone would be more. So 2 pointers: one is sitting orders, two is more buyers coming into this into the trade, given it's a good support zone as well. But since I mentioned about that sitting orders, I also see how this particular zone is used or not. How many times does this bounce off this area? So if the price has come, this bounced off here, the third time or the second or third time, I would be a little more cautious whether the supply zone, this demand zone, will hold or not. The reason being, now this zone has been tested multiple times. It's a simple support or resistance concept, right? There's nothing. So the more the support is getting tested with volume, the chances are, in quotes, in air quotes, it can be quicker, right? The chances are getting broken. The first time there is always
right. I've seen it happen numerous times, like where I've taken a few trades off of the bottom of the channel, and then that third or fourth time, that's when it flushes and it wrecks you.
Correct, exactly. So look for whether the zone has been used, how many times has been used. More than 2 times is I become very cautious. I look for I need to have I will not take on the first dip into that zone. I will look for a double bottom setup in the zone. If so,
you're hoping you can go down to the lower time frame and see it do one of these and then bounce, rather than a higher time frame. If it's the second or third time on a higher time frame, it's going to be a little more sketchy because it's already bounced on the lower time frame a couple of times.
Yes. So if you have a scenario where it's making low lows, which means that every bounce the price is getting more and more rejected, and the price is not able to make a higher high. So it's basically on a downtrend. If you have a channel going down, which predominantly has a higher chances of breaking down. So
it's getting heavier, it's consolidating. Right. So it's looking more like it's going to roll over versus coming out of that consolidation to the high side.
Unless Pelosi comes and buys huge number of stocks at this particular zone and then goes up. So so those are the confirmations that I look for. So that's futures. So how do I trade stocks with the same concept? So let's look at Tesla. Yeah.
Love me some Tesla.
Yes.
This girl needs to break out this week.
Yes.
No more playing around.
Yeah. So let's look at, so when I look at it, when I try to identify a zone in a particular stock, the first thing I do is that I take the, I take the extended hours off. So I always draw the zone without the extended hours.
You draw the zone without what?
Without extended hours.
Okay.
Without extended hours.
Yeah.
Always do. So no pre-markets in that particular chart at all.
Yeah.
All right. So I let's go back to when did I? What is that now? The 22nd, probably 22nd is when I think. Yeah. Let's go to low time frame, 30 minutes.
So now, do you use you definitely use the same time frames as futures for when you're doing regular stocks as well to do the demand zones?
It's always 30 to 4 hour to the daily. So this is a zone which I always look at. So I hope people can see this. Okay. Let's go back. So November 22nd. So I was just start charting it for you so that we can go look. So 4-hour time zone. So I don't have anything. The 4-hour, 3-hour is where I see that, but I don't have a confirmation that. So one of the drop. Yeah, go ahead.
So what you're doing there is you were looking at the 4-hour, and there really is no clear supply and demand zone that you can actually mark, because there's no inside candle. Like if this inside candle had this right next to it, that could be a supply zone, right?
Sorry, which one can be?
So
yeah, this one exactly.
Yeah, so this little highway could be your base candle, right?
Correct.
In this.
Correct.
But since it's a gap there, right, on the day, you can't really consider that a
Yes.
basing candle, correct?
Yes, correct.
Yeah, so there is no supply and demand zone in this time frame. So you go to a lower one to look for a
Exactly.
candle.
Exactly.
Right. Okay.
So here is a zone which I marked. It's a zone where the price has moved up, moved down, and I go to a low time frame, and then the next day, what happens is that next morning, the price comes into that zone, gets totally rejected, again comes into the zone, again comes into the zone. The price is not able to, So this is
the bulls lost.
yeah, the bulls lost. So here you have a proper, I don't think you can make a head and shoulders out of it, but you can see that the price is rejected first time. Second time around, it made try to make one, but a lower volume. Again, price just rejected after it. So here is my zone, which is where I can see the overall trend is high, high, low, high, low. So it's basically making a low.
Yeah, so it's kind of consolidating and squeezing, ready to roll over.
Yes. So let's go to, I'm sure the price, yeah, there you go. So if I go to 15 minutes, just for a sake, the same zone where it got rejected the time which we discussed, and it opens there, goes there, get rejected royally, comes back again. You can see in a low time frame, price rejects, touches that area, rejected nicely. We can play in that particular.
I mean, these two candles right there, without even that supply zone, I'm taking that short. Right?
I mean, you don't need a zone for that. You can see that there is a highway candle after highway inside candle with a bearish volume.
Yeah,
you can take that. Yeah.
I mean that's a great confirmation, right? You have your supply zone there. I mean, that gives you the conviction to really just, hey, this thing should definitely roll over. Let me buy a couple extra puts on this, right?
I'm pretty sure there's a lot of trap moves there, so they would have all gone for, and then Jeremy would say, okay, break below this good high wave bullish candle. Yeah, it should roll over with a stop there.
Yeah,
easy trade there.
Yeah.
Yeah.
I think Jeremy made money on that too.
Yeah. So there's I think I had another one which was marked as 1st November. Yeah. So here it is on a lower time frame. I'll keep switching where it is. So here it is a good bearish candle, and then the price just blasts from there. So this is my demand zone, and you can see when the price came next time, it bounced out of this area zone. So if let's go to a 15-minute chart, and I would have drawn, and you can see I took the 1 hour demand zone, as I want to just cleanly want to explain this. this is a 1 hour demand zone, which I marked here. This is a 1 hour demand zone, which I marked here. Now, do I need to take this 1 hour time zone, the time period, because this is 114 to 1120. So that's 25 points in a Tesla trade. But if I go to a 30 minutes, do I see a better zone? I don't typically go down to a 15-minute chart, but you can see a proper drop and then the rally from here. So this is a better zone from a perspective. This is a good zone where the volume picked up. So you can see whether if you want to take it as you want to keep your entry at this low, or you want to take a higher entry point. So you can decide whether I don't look at 15-minute zones at all. I don't look at it. The least I go is a 30-minute. So this is the least I go, a 30-minute zone. And I don't see clearly a 30-minute zone over here inside a 40. I look at a 45, I don't see a 45 as well. So 1 hour is the zone which I caught. So in that 1 hour zone, if I go to a 5-minute chart, and in the pre-market, it came and dipped into that location and then it bounced out. So this is what we can play as well. So and this is the first time this zone has been tested. So this is the first time the zone has been tested. So that gives you much more conviction to play this as well. So if you look at a 3-minute, I don't know that there's.
Yeah, so you would just set up a little order over that consolidation.
Yes, correct. So that's so when I draw a zone on a stock market, on a stock chart, I basically take out the external hours off and mark my zone, and then that's how I do it compared to ES. Now, another question which normally happens is that if let's say this is a zone, which I had a 1 hour zone, what happens if the price gaps down here? So instead of trade dipping in the pre-market, the pre-markets comes here and then try to do this. So what happens to this particular demand zone? So typically what happens from a sentiment perspective, this is where people have bought. This is where the people have bought. A lot of people jumped in. There are sitting orders here, or this is considered as a support area for you as well. So there are a lot of buyers here. So in the pre-market, when the price comes down the zone or gaps down the zone, this automatically converts into a supply zone. Make sense? Because now everybody who has jumped in here are in a loss, so they'll just try to get out of the position.
They're gonna sell to cover the trapped.
Correct. So when the price jumps in,
be the trap and catch this, right?
Correct. Exactly. So this is my. Do I take this as my primary strategy? No, I don't. This is not my favorite strategy, but I've seen over time and time that if it gaps down a particular zone and the price comes to that particular zone, then it becomes the other zone. So if it is a demand zone and it gaps down the demand zone, this becomes supply. And if this happens to be a supply zone and the price gaps up and then comes down, this becomes a demand zone.
So you could try and depending upon how this chart looks, right, and time frame you're looking at, you can set up a little quick scalp trade kind of thing.
Correct.
Because it should bounce there a little bit at least, right?
Correct. So just for an argument perspective, I just thought I'll just draw here. So this is my supply zone. This is my demand zone. And if the price gaps up this particular, sorry, if the price so if the price gaps down pre-market and comes back to the zone, there's a higher chance of this getting rejected.
Yep.
And if the other condition is that if the price, sorry, I'm starting in the wrong place. So if the price gaps up overnight, comes into the supply zone, there's a high chance of bouncing of this position as well.
That's good, because I mean, if it's gapping up, you obviously want to catch the retest, right, to take it higher. So you have that zone marked, and then that's comes into that zone. That's you already got your spot where you're looking for it to reverse and set up your trade.
Yes.
Guides you to the area where you want to be looking for the reversal.
Yeah. So other point which I mentioned earlier is that I had, let's close this. So this was a demand zone which never got, I think there is a bounce here in that 4 hour, even though it went through, there is a bounce which has happened, which I remember taking that particular trade. This is a new supply zone here. If the price comes back to this, then I will try to short it. If the market condition, everything sits pretty good. So I see whether I look for if the price movement into a demand zone is pretty aggressive, then I'm cautious. But if there is, so okay. That. Let me show you. Yeah, so if there is a consolidation like this, so when price comes into demand zone, if there is a consolidation like this, and you can make certain chart patterns, like you have a drop, you have a consolidation, you have a drop, you have a drop, consolidation, you have a drop. So if you can mark those chart patterns into and use your demand zones, then you will be able to trade better. So here it is. This is if this is the kind of movement which if I'm seeing into a demand zone, I wouldn't just take the trade just because there is a demand zone. I'll wait for, this is pretty aggressive move, and I don't see any kind of a confirmation to get into a long position at this particular point. I don't see a bounce. There's a bearish hammer here. I would enter at the top of it probably, but not here. There's no point entering here because there's a lot more trap buyers here. So I'll see all those conditions to see whether it's a better, does the trade gives me a higher, is it a good risk reward at the first position? And also how the market condition is there a very bearish sentiment overall, like what we had in the last couple of days or last 1 week? If that is a whole sentiment, then I wouldn't go long just because it's a demand zone. I will wait for confirmations like this. There's a double bottom, and then you can take a trade off. So this was a 1 hour zone or something like that, which I had. And then you can see there is a, it dropped, base dropped here, but then I got a hammer, and then I got a double bottom. So you can basically take from the double bottom or the retest or something like that for a 20-point move.
Yeah, you're not going to just set a resting order.
Yes, I'm not going to set a resting order.
Right? You want to wait to see it do that. Right.
Yeah, especially after having this bearish hammer and the low is broken, then I'm not going to put a long position absolutely here because it's just because it's a demand zone. I will not put a position because it's now trapping a lot more buyers. There's a high chance it will just go down. So those are the things that just need to keep a watch on. So yeah, but it has worked fantastically when the price moves on a sideways consolidation overnight, and then it goes slightly into the demand zone. It just bounces off that particular point. There's a lot of examples of there. Here also you can see the price move aggressively onto this, but I wouldn't take a trade because this is very aggressive movement. You can see there is a basing candle right here. This is 30 minutes, so you can see there is a basing which happened, and then price moved aggressively out of this. So yes, this is my demand zone, but would I have taken a trade of this? No, I would have taken a double position. There is a hammer probably on above the hammer, or you want to wait for a consolidation and come to this particular zone. I would have taken the second dip for a kickball.
Yeah, so you want to wait for the retest.
Yeah, you want to wait for the retest.
Yeah. And then
so there wasn't really a
a candle in there, well, on the 30-minute at least, right? But like, for instance, if you say this is the 5-minute time frame, right?
Yes.
You're gonna have to enter a
Yes.
trade. There really isn't a candle that you would take, but that is your demand zone. So you can just say take a breakout for a quick run, so to speak.
Quick rounds. That's right.
Yeah.
And also, if you see, I mean, this is not the time you would have taken a trade for a 50 points move. This is more of a 20 points move in a year, or 20 points move in a year, because the overall sentiment is it's making lower, higher lows, higher lows, higher lows. So you wouldn't challenge the trend right now. The
Yeah,
overall
this
trend,
is right.
yeah,
It's bearish, so I'm
It's
definitely
bearish.
going to be cautious taking bear trades, right, and then or taking bullish trades, because the trend is bearish.
Yes. So if I go to the main, yes, I think I have a chart over there that says, yeah. So the overall trend is this. So in this scenario, if you're taking a bounce in a demand zone with added confirmation or a double bottom, I would take it only for a quick 10-point move rather than waiting it to ride all the way for a 50-point move. But if it is if I'm taking a trade from a supply zone, so let's say there is a supply zone here, I'd rather would be happy to stay in the trade to get a 30 or 40 or 50-point move, rather than having just to take a 10-point move, because
Right.
the overall condition is bearish.
Yeah, it hasn't reversed yet, so you don't want to go against the trend. You're most likely not going to get 50 points going against the trend unless it's some giant news.
Yes. So my expectation for next week is it will come down to this particular zone and it'll bounce. This might be the bottom, or this is already the bottom, which is a 1 hour zone. So you can see it came to the 1 hour zone, where it is 1 hour of how back was it? So I don't think you can.
Oh wow! So until they like kind of break and retest some of them zones you have down here, you leave them on the chart just in case.
Yeah, I always leave that chart. So this is you can see here. If this is the time period, it had a basing and just started moving from there. So there's a high volume shaved bottom kind of a candle which came in, which basically meant that the bulls just jumped in. So this became a zone, and this is a zone which I had still marked in, and the price came into that zone after a lot of chopping. So you can see the price action. It moved aggressively down, then it chop, and then it came to the zone and then bounce off the front. So this would be a easier trade to take. But again, I would just trade for quick 10-point or 15-point or something like that, or even 20-point, right? You can just take it for a 20-point. You would have got that 20-point because the overall
this is like 1, 2, 3, 4. This is kind of like a
1, 2, 3, 4, 5.
Slow it down.
And then you have your correction wave as well. So
yeah. And it looks probably a little bit better on the 5-minute too as well.
Yeah, sure, it should be. Yeah.
Yeah, so you got that hammer, the reversal, that gets the volume gets taken out, little inside candle. So
you got your flag.
Yeah.
Yeah.
She's definitely getting tired of going bearish.
Yeah. So yeah, I leave all the zones there. I leave them marked. I used to mark. So if you see all my horizontal rays, it has. I have kept the template as all these things. So 1HT is 1 hour demand, 1HS 1 hour supply, 2 hour, 3 hour, 4 hour, 30 minutes, 5 minutes, 90 daily.
That way, because obviously the higher time frames are stronger. So if it's coming down into a zone and it's a 1 hour and it's a huge move with huge volume on the higher time frame, it's most likely that 1 hour might get taken out by like a 3-hour candle, right, coming in there or something.
So always keep that higher time frame, the overall market sentiment in perspective when you take a trade. I mean, it doesn't matter whether you're trading off demand zone or supply zone. In any strategy, that's the same, right?
Exactly, for sure. You definitely want to be looking at the overall trend, intermediate trend.
Yes.
Always look left on your charts.
Always look left. Yeah. Yeah. That's boom sauce.
Awesome. That's supply and demand in a nutshell. Thank you, sir. I appreciate your time.
No worries. I think I had a. Let me just look at my notes. I had certain points. So yeah. So this were my points which I thought I'll discuss with you. I think we talk to demand and supply concept, what causes an imbalance. Let me just make this a high. Yeah. So how to identify what is the basing candle, rally-based rally, rally-based drop, drop-based drop, drop-based rally. So these are the structures which basically gives you that basing candle. So look for that particular basing candle in this rally base and rally base and drop, those kind of things. That gives you this one. Look for confirmations in the zone. What happens when the price gap? So we talked about that also price. So I think we covered all the points what we want to discuss.
Awesome. I appreciate it. That's cool. Hopefully you guys find this stuff useful.
If you have any questions, shoot me, DM me. We can have another session just to talk through more examples.
Awesome. Thank you, sir.
All right.